This is a video lesson on VWAP, volume weighted average price, and more specifically, what is VWAP and how is it used in day trading? I use VWAP a lot when day trading and swing trading because it helps me determine the average price of a stock throughout a trading day even better than any other indicator. For example, simple moving averages and exponential moving averages are great, very useful tools. However, they are calculated without actually taking into account the volume of shares which were traded at any given price point, which can lead to them showing possible fake out buy or sell signals. VWAP, on the other hand, does take into account exactly how many shares were traded at a specific price, and therefore gives you a more holistic understanding of the price action, which for day trading is crucial. If we look at a stock like GE, there is a big run up in the stock price during the mid-afternoon, but the average price during the day, even though it is increasing during this rally, is still around the 1075 range for the entire day. When you factor in the volume of shares traded during this small rally versus the number of shares traded throughout the entire day, you get the VWAP. It's important to notice that the VWAP lags behind. Now, the moving average, on the other hand, followed the stock all the way up and all the way back down. When moving averages are calculated, even if only 5 or 10 shares are traded during a price spike, the moving averages will come right up. Volume is not taken into account whatsoever. And if you've watched some of my other videos, you'll know that I view volume as one of the most fundamental signals to buy or sell. Without considering volume, we cannot get a clear understanding of the center or median price for that trading day. But how to use VWAP for day trading, you ask? I use VWAP as a level of support or resistance for day trading. If a stock rips up and I think it's overbought, I will short it with my target price being a return to the VWAP line. So if you look at GameStop during the short squeeze, we had this big break up, rising 40% in just 1 hour. What we can notice, and this is typical for a lot of stocks, is that you'll have a strong run up and then a return to the VWAP. And then maybe you'll have some flat trading for a while before another run up and then another return back to the VWAP. Similarly, when stocks are falling and getting into the oversold range, we can notice the same pattern. A stock will move sharply down and then return back up to the VWAP. Then it might either break the VWAP or find resistance at the VWAP point and have another strong run down if it's unable to break above it. If I'm considering entering into a day trading position on a stock that has been selling off, one of the first things I'll look at is how far away are we from the VWAP line, because my price target will ultimately be a return to the VWAP. If the stock is very close to the VWAP or just slightly below it, there might not be enough potential reward to enter the trade since my target price is the return to the VWAP. So I look at my potential reward to risk ratio. When considering day trading positions, I always want to have a minimum a 2-to-1 reward to risk ratio. When I see a stock which is falling quickly, I will wait for a confirmation that the trend is about to reverse. To do this properly, what I'm looking for is a candlestick to close green, meaning the price for that 1 minute closed higher than it opened. This confirms the reversal. I set my stop loss to the low of the day. For example, in JDST, once the stock is showing signs of reversing by closing on a green candlestick, I can enter the trade on the next candlestick, in this case around 9:05. I can then set my stop loss to the low of the day, which in this example is 8.98. This means that if a stock price dips just 7 cents below my entry at 9:05, I will be stopped out of the trade with minimal losses. My target price is a return to VWAP. In this scenario, it's hanging out at 9.35 or about 30 cents above my hypothetical entry point, which I would have only entered after seeing the green candlestick close confirmation. Thus, I'm risking 7 cents, which is where I would be stopped out, to gain potentially 30 cents, the distance to the VWAP. This is approximately a 4-to-1 reward to risk ratio and thus is an attractive trade to take. VWAP is famous for being used by huge institutional investors and big mutual funds. The reason these big investors love the VWAP is because these guys buy huge amounts of shares, and if they aren't careful, they can have a pretty huge effect on the share price of a stock just by entering a new position. VWAP helps big institutional institutional investors from this happening by indicating a good position to get in based on the average true price of the stock for that trading day. Now, besides being used to find price targets, VWAP can also be used to find support and resistance. This is fundamental to understand when day trading. Like I already said, so many big institutions either buy or sell around the VWAP. This means that when a stock is falling to the VWAP, large investors sometimes use a VWAP bounce as their chance to get in. And you should consider doing the same. Let's say there is a hot stock which is clearly going to have a good day. Do you jump in excitedly, buy at the high, and then watch as the stock stalls out for the rest of the trading day? Not that I've ever done that. Or do you wait for a pullback to the VWAP before entering in like an intelligent, patient investor? VWAP bounces are extremely common and often provide a great entry point for a long position. In fact, a stock will often have multiple VWAP bounces in a single trading day. This is NEO on January 22nd. Can you spot all the VWAP bounces? 4 VWAP bounces in one trading day. Remember, large institutions sometimes use VWAP to buy into new positions. Therefore, you may see a spike in volume as a stock nears the VWAP, giving you further confirmation of a potential bounce. To hammer this point in, here's SPCE with 3 distinct VWAP bounces in a single day. But VWAP does not only act as support, it can also act as resistance when a stock has been downtrending. Here's NEO again, this time with the VWAP acting as a resistance point 7 times in one trading day. If you are looking to use the VWAP to day trade, a good strategy on this day would have been to short the stock every time it neared VWAP with a stop loss just above the VWAP line. And one final example of VWAP as a resistance. Here's Disney, and we notice the same thing. By this time, you should be easily able to spot the VWAP bounces. A great opportunity for day trading is to short the stock on a downtrend when it is approaching the VWAP. Since a downtrending stock most likely won't have enough buying pressure to break above the VWAP, and even if it does, you have a stop loss set to just above the indicator. This way you minimize your potential risk but still leave yourself exposed to all the possible reward. And the final way to use VWAP is to determine the overall strength or weakness of a stock over a certain period of time. Just remember this, above the VWAP equals strength. Below the VWAP equals weakness. This should be pretty easy to spot. For day trading, keep in mind that any stock which has trended above the VWAP for the previous 2 days is showing strength, and thus you should be considering trading that stock to the long side. Here we are looking at Netflix. Since it has been steadily trading above the VWAP, we should be looking for places to enter to the long side. Waiting for a VWAP bounce to enter long and setting a stop loss just below a break of the VWAP is a great low risk play. Conversely, if a stock is broken below the VWAP and has been unable to break above it for 2 days or more, you should be more short biased toward that stock until and if it breaks above. Here we are looking at GameStop, which has been steadily trading below the VWAP. Thus, we should be looking to short GameStop at least until it starts trading above the VWAP again. A good way to do this is to short the stock as it approaches the VWAP, setting a stop loss at a break just above the VWAP to minimize your potential risk. Thanks for watching, subscribe for more tutorials, and I'll see you in the next video.